We've already had 4 interest rate cuts since last November, has not really sparked the economy despite the aberrations we got in the first half with that stock market bubble. And also we've had several cuts to the reserve ratio requirements at the banks. They still have a lot of room to go there. ANZ Bank, for one, expects at least another benchmark interest rate cut.
The key issue for China, can they accelerate productivity growth rates in a domestic economy? Externally facing, China is already competitive. It's really agriculture, services, domestic industries. And when I talk about domestic reform, I don't mean combining a couple of shipping companies. What you need to look at is over 10,000 state-owned enterprises across China. How can you improve productivity of that area? What you should look at is agriculture. One of the very few areas where China is less competitive than India is actually in agriculture.
There's been a bit of a race to the bottom out here with Japan obviously depreciating its currency. The euro obviously has been weaker, and we saw this reflected in the monthly export numbers. As you mentioned, exports were down 8.3%, much more than expected. EU shipments down 2.5%. Japanese shipments to Japan down 10.5%.
What we have heard in recent months are rumblings from senior leaders that they will finally turn their attention to state-owned enterprise reform. This is known to be high on the policy agenda for the leadership. So this sort of seems to be a new step in that. I mean, the big thing to remember on the SOEs is they dominate so much of the economy. So if the government is looking for areas where it can spur growth as well as allowing increased lending by policy banks and some of the other measures you guys mentioned, SOE reform, sort of tightening them up, making them more efficient, would be a natural next step.
Yeah, the way I look at it, you're sort of selecting amongst ugly sisters. There are problems everywhere. So would you rather buy commodity producers rather than commodity consumers? Would you rather buy countries that are dependent on the foreign capital flows, or would you rather buy a country that has significant domestic liquidity? So we select China not because China doesn't have a problem. China has many problems. It's just everybody else also have very substantial problems going forward.